But that con call with Sesa Goa brought up some questions about the bigger picture. We're here to discuss that and more with Diptarup Chakrabarti, who joins us from Gartner on this leg of the show. Diptarup, morning to you. Thanks so much for joining us. Let's start off by talking about what it's looking like for India post-Infosys, post-TCS, and the kind of outlook on the IT sector. More importantly, do you think that the worst is indeed over?
Okay, see, there are 2 points to note. One is obviously the IT industry, for the Indian IT domestic industry, the worst is over. But the good times will only happen when the US market really starts recovering and starts giving business out in big numbers, because that's where the bread and butter for the IT industry comes from. Okay. Second thing is, another good news is that the Indian domestic market has opened up and it's a significantly sizable market. The third thing which I would like to point out was that in 2009, the overall IT industry or the IT business shrunk by about 3%, 2.9% to be precise. Gartner predicts that in 2010, it will grow by 3.3%. Now, given this situation, 2010 will definitely be better than 2009, but it will not be as rosy as it was, say, in 2007 and 2008. It will still take some time to get those great tidings coming in. In really, the stabilization of good times coming in will still take some time.
Diptarup, what kind of growth rates are we talking about for the overall Indian IT sector going ahead in the backdrop of the evidence that you have from Infi and TCS?
Yeah, see, again, the Indian domestic market, we are predicting about 19% growth over 2009. Right, that's the Indian domestic market, which means the Indian IT services companies play over there. Globally, I told you it is 3.3%. But one of the key things is that it's difficult to correlate 3.3% with the Indian IT services growth. But if you just do a back of the envelope calculation, the 2 or 3 companies which have announced their results have performed much better than their previous quarter results, which means even at minus 2.9% shrinkage of the market, they have shown resilience to, so the trend going forward would be definitely much better, both in terms of top line as well as in terms of bottom line.
Diptarup, can you break this down for me even further? Which are the verticals, for example, that are showing the maximum traction for the Indian IT companies?
Well, firstly, somewhere in mid of last year, that is 2009, the banking industry started opening up and started giving business. So we are also seeing some amount of turnaround in the manufacturing sector. Retail is also turning the corner. So is automobiles. So these are some of the verticals that you will see opening up, and the traction will happen more in these sectors.
The one common piece of commentary that came out between Infosys and TCS, Diptarup, is that Europe was not showing as much traction as the US was, and North America specifically was leading the recovery and BFSI within North America. What is your own assessment of the geographical spread, and which geographies are likely to drive growth for at least the frontline IT companies going forward?
Yes, see, US will still be the major market. US is still some time to UK, the European market is still has some time to recover. Southeast Asian markets will be a big boost for the Indian markets if they have made their presence. Markets like Latin America would also be important. But one key vertical, and I keep on one key geography, and I keep on emphasizing that in every interaction of mine, is the Indian domestic market, which is roughly about $7 to $8 billion in 2010. And it's no longer a small sliver in the pie. If you are assuming that the Indian domestic IT business is about $60 to $70 billion, you're actually looking at a market which is about 10 to 12% of the entire Indian IT's business. So people should definitely start focusing on the Indian domestic market.
Diptarup, the questions that remain post the numbers we've seen, even though there is a growth in volumes, most frontline IT companies are reluctant to say that pricing power has returned. What's your own take on both volumes as well as pricing for the sector?
See, going ahead, we see that the price pressures that were there in the beginning of last year and the end of the year before has definitely stabilized. So you don't see too many clients complaining. the volumes will be interesting to watch, because there are a lot of deals which are up for renewal globally, and these are all multi-million dollar deals, sometimes even multi-billion dollar deals, and some of the Indian companies will definitely have a role to play in them. So the volumes ticket size will also be pretty large. What could be a worrying factor going forward is the dollar rupee ratio, which right now is hovering around 45, and that should hurt. If it goes below 45, it should start hurting the Indian IT companies a bit.
We have some evidence on ground that a lot of the frontline IT companies are going in for the $50, $100, $200 million plus kind of transactions. But if you looked at it sequentially, the addition of clients has not been more than one or two at the upper end. Do you think that clients are actually at this point in time, despite perhaps showing a bit of decisiveness on the budgets, are playing for a bit of reduced ticket size and sort of playing it safe to enhance the size of these orders in subsequent months?
Well, no, we haven't seen any such trend. Obviously, a lot of projects which were discretionary in nature has still not been opened up, still not been brought to the negotiating table. The necessary projects are still what is being opened up right now. So obviously those ticket sizes will be smaller as compared to the bigger ones. And I'm talking of the renewals, are talking of large infrastructure deals which have to be negotiated, and contract have to be signed, because companies cannot do with without these kind of projects. So there's not necessarily a trend that only small ticket projects have been given up. But one thing I must say, that discretionary projects, nice to have but not must have, those kind of projects are still not in the front burner.
Diptarup, are you one of those who think that IT companies may face a difficult time in the next fiscal because of any kind of talent crunch? Do you subscribe to this view at all?
See, talent is always going to be in short supply. The demand is always going to be in short supply, even during the height of the financial crisis and the hiring crunch or whatever was happening over a year back. People with specialized skills were still in demand, and still there was a shortage of supply of that. So that is an issue that IT companies is going to grapple with for some time to come.
You think there will be some concerns on margins if the hiring is continue to be very aggressive, if the recovery is well and truly underway? How is the employee side and SG&A expenses part of the equation likely to pan out, do you think, say for example in the fourth quarter itself?
See, I feel it is each quarter is going to be better than the previous one. What we are seeing in the last quarter is that a lot of lateral hirings are happening rather than fresh hirings. I think the fresh hirings is going to happen coming year onwards. And also remember, a lot of offer letters which was issued last year, are now being absorbed in the company, because a lot of companies gave out offer letters, but the joining date was pretty much later in the future, sometimes even a year ahead in the future. Now those obviously are being absorbed in the company right now. So the fresh hiring announcements will be happening now, great, but actual hirings, or rather the offer letter issuance, will start happening from somewhere like March of 2010, or rather March of this year. That's what we see. You will see a lot more lateral hirings happening than fresh hirings.
Diptarup, thanks so much for joining us with that perspective. That's the Gartner view on frontline Indian IT and what the remainder of the year is likely to look for them. It is earnings season, so like we said, we go from one set of numbers to the other. IL&FS investment managers came out with numbers